Looking at the depreciation of fixed assets, fixed assets are expected to be depreciated monthly. When fixed assets is being put in use, every month the value of these fixed assets will reduce. As you put it in production use, and these fixed assets will continue to fall in value, and that is accounting has already taken appropriate measure to always account for this fall, continuous fall in value, and that is what we call depreciation of fixed assets. Any asset that is used for production must go down, and once they go down, we measure it alongside against the profit. We try to ensure that we charge this fall in value, this continuous fall in value against the profit. So, and that is what we want to account for here. If just follow me as I put you through on how to do depreciation of monthly fixed assets. How is this done? Depreciation is depreciation charges is always done between depreciation accounts and accumulated depreciation for each particular asset. Take for instance this Toyota Corolla 2021 model. If you want to do the monthly depreciation, you debit depreciation account and you credit accumulated depreciation for vehicle. You do not credit fixed assets, please. Don't get me wrong. Debit depreciation account and credit accumulated depreciation for vehicle. So let's proceed as I walk you through how to process and post monthly depreciation of fixed assets. So the first thing you need to do, like I always tell you, is to go to task, because you are performing an operation. Go to task. Now in this case we are going to make use of general journal entry. Go to general journal entry. Depreciation of fixed assets is always posted towards the end of the month, so you pick 30th depreciation, let's say for October. Okay, GL accounts. The first one, the one we are posting first is Toyota Corolla 2021 model, 173,000. That is the only vehicle we have. That's the only vehicle. Okay, we have two vehicles, Toyota Corolla and Elos. So let's start with this. I'm going to choose accumulated depreciation for vehicle. Okay, we are debiting depreciation first. Depreciation is an expense account. So you can see it's a standalone ledger. Depreciation in October, 173,000. I'm going to do the same for Elos because they are in the same class of account. Elos is 803. So that is every month we'll charge 803 against profits until the asset is fully depreciated. That is when we will stop. We will not stop until there are two things that stop depreciation: until the asset is fully depreciated, or when the asset is no longer in use. That is one thing about depreciation. There are two ways to stop depreciation: when the asset has been fully depreciated and when the asset is no longer in use. You do not depreciate an asset that is no longer in use. Once the asset goes spoiled, you stop depreciation. So the next one, let me write it out. Let me write motor vehicle. Let me see. Toyota. Instead of writing this October, let me just change it to, because we already know that is Toyota Elos. The next one is landed property, not depreciable. You can see. Next one is laptop. What is the GL account for laptop? That is computer. Sorry. Please, we are crediting this first. We are crediting accumulated depreciation first, then we debit everything. We now sum up everything together to to depreciation account directly. This one is wrong. We are choosing accumulated depreciation for motor vehicle. Accumulated depreciation for motor vehicle, which is 1925. It's accumulated depreciation for motor vehicle. Then we will now debit depreciation account. So laptop, we are choosing accumulated depreciation for laptop. This is computer. Laptop. How much are we depreciating monthly for laptop? 84,250. 84,250. $19.10. This is our this laptop is for our MD. You can indicate it. While this is for our accountant. You can indicate it also. So we still have furniture. And this is 611. Next one is furniture. So what is the accumulated depreciation for furniture? Accumulated depreciation for furniture. 48,233. 48,233. So now we will now debit. Everything will be summed up to this out of balance. We will use that to debit depreciation account. This is where depreciation account will now come in now. We'll look for depreciation expense account. We've chosen it before this. So 1169594. You can see. Now, this is a continuous thing. This is what we will be doing every month until that particular asset is fully depreciated. This will be credited while all the depreciation accounts will be debited. So everything is being debited here. This is how to do depreciation of fixed assets. So next month again, this same process will be this same process will be actioned. Another month again, this same process will be actioned. This is what we do. That is every month. This total balance will reflect in depreciation of fixed assets, while each of these balances will go to their separate accumulated fixed assets. This is a continuous thing. Once you buy another fixed asset, you start depreciating. You continue to add it. That is how it is done. So it's a big job in an organization. Depreciation of fixed assets is very, very important, because at the end of the month, the organization wants to know how much assets have been depreciated in a particular calendar year, which is very, very important. So the whole essence of this course is for you to be able to know how to go about the idea of depreciation of fixed assets. And like I told you earlier on, depreciation of fixed assets must be done monthly, and the accounting entries are to debit depreciation. This is it here. Debiting depreciation account, and you credit each of the accumulated depreciation that pertains to that particular fixed asset. You can see this is for a vehicle. You can see it is an accumulated depreciation for a vehicle. So this one is for vehicle also, while this one is for computer and laptop. You can see. So you are not don't get me wrong. You are not crediting fixed asset, but you are crediting accumulated depreciations for each of these fixed assets. So Make sure you go through this, and thank you. God bless. See you in the next class.